Good morning, members of the head table and the invitees and ladies and gentlemen. First of all, I would like to thank the organizers of the Jargon Institute of Management for inviting me as the international guest speaker for this third international conference. And the topic for this conference is Microfinance and Digital Economy, Challenges and Opportunity. What a wonderful topic. I was eagerly waiting to visit your esteemed institute and to address you physically, but due to COVID-19, I am not in a position to visit your university, visit your institute, but I intend to visit you as early as possible. My speech will have few dimensions. One is to give a brief introduction about microfinance and to share some of my experiences about microfinance. And secondly, to discuss the challenges and the opportunities in microfinance and digital economy. And finally, to focus on research on microfinance and some of the important factors based on my experience as well as based on my university in Sri Lanka. First of all, we'll see what is microfinance. What do you mean by microfinance? What are the definitions given for microfinance? Now, most of the microfinance companies in Sri Lanka and also in other countries, they focus on improving their profits. But when you really see what do you mean by microfinance, it is to extend credit for the very poor people in the society, to extend credit to the very poor people in the society, to overcome poverty and to make sure that they get some self-employment, to generate some income, and also to keep their fireplace burning and then to sustain that income over a period of time. So this has a deeper meaning, and there's a direct correlation between microfinance and poverty alleviation and the cottage industry if you really look into this. In other words, providing small loans, not large loans, not corporate loans, but providing small loans. Maybe in Indian rupees, probably 10,000 Indian rupees or 20,000 Indian rupees and so on. In Sri Lankan terms, maybe roughly about 30,000 Sri Lankan rupees, 40,000 Sri Lankan rupees and so on. If I enlighten you about microfinance across the world, Muhammad Yunus from Bangladesh in 1976 started having experienced the level of poverty. He started giving loans with a maximum amount of $27 US for the very poor people in Bangladesh. And this concept has grown in exponential terms today. And today in Bangladesh, it's known as Grameen Bank and the Grameen system. Today, the development of this concept is huge, is enormous, so significant. They even sponsor test series for cricket in Bangladesh. They have the Grameen Bank, they have the Grameen phones and so on. So, if you really focus on this microfinance, you can see the amount of potential not only to help the poor in the society, but also to contribute towards the GDP and the economic growth and many other businesses in the society, even in the corporate world, because the cottage industry provides the foundation for a future multinational. If I share some of my experiences from the Sri Lankan perspective, earlier I was a banker. The bank where I worked, Hatton National Bank, came up with a concept of Gamipu Pudua scheme, that is to that is to develop the rural sector, villagers in Sri Lanka, by giving small loans, as I said earlier, 20,000 rupees, 30,000 rupees, with a threshold of maximum 100,000 rupees. That is to make flower pots, flower vases, soft toys, sometimes to grow roses in your garden, and then to sell them to a huge or well-established florist, and so on. In my branch, we had roughly about 60 projects like that, but all micro. And I used to inspect those projects occasionally, not only to maintain the relationship, but also to ensure that they are using our funds, the bank funds, properly for the given purpose. So you don't believe some of the borrowers even went up to the second level, third level, and some are today having large shops and earning probably over 10 million rupees per month. So that's the level of microfinance experience. And generally, by looking after the family, looking after the kids, looking after the house, they, while cooking or while doing the domestic work, they keep on doing some other work which would really help them to keep their fireplace burning. And also that would strengthen their wallet. And so that's why that should be the crux for microfinance. Also in 2016, November, the Japan Times newspaper clearly stated, based on a research, Swiss-based research, that out of 7.2 billion people in the world, 2.3 billion people don't have access to credit or financial facilities. So just see, my dear friends, 2.3 billion out of 7.2 billion people don't have access. Especially the lower segment of people in the society, poor people. So you can see the enormous amount of potential that is available in this particular sector for microfinance. So this information would really enlighten us about the potential and also the possibility to improve their social standard and the living standards and so on, and also the way we can improve our GDP and so many other economic factors. Having said that, I would like to now move to the challenges. My dear friends, ladies and gentlemen, learned professors, our world is evolving day by day. We are living in an evolving world. We have passed the IT era, we have moved to the satellite era, and now we are into drone era. So the world is evolving at a faster pace, but at the same time, the requirements and the needs in the microfinance sector and the people who are seeking financial assistance is at the same level. So there's a massive gap or the disparity between the evolving world and the lower standard or the lower level of the society is widening. That is the very first challenge and probably the biggest challenge, my dear friends. So how can we overcome this issue? Because if you really analyze the microfinance, the people who obtain microfinance, their prime objective is to survive first. They don't look for growth, they don't look for sustainability, but they want to survive. How can they earn some money to keep their fireplace burning, to send their child to a better school, to provide education, or how to give the financial support to strengthen his or her wallet, husband's wallet or wife's wallet. So that's the key aspect. So we have to understand the survival factor or the need for survival in this sector. So when the disparity is getting widened, you have to understand, first we have to meet their requirements and then think about the digital economy. But at the same time, the second one is that With this survival, they want to pass the first stage of the product life cycle curve, survival, and then to move to the second stage, growth. That's the time we can slowly and steadily introduce little bit of technology to improve their business. Then the third one is that they find it difficult. Now, this is my own experience, my dear friends. They find it difficult to find markets to sell their products. When the top people or the other buyers see that they are coming from this level, they say, okay, you can put your goods and go, we will pay you after 6 months. So their working capital cycle also getting widened. Or they find it difficult to recover their money. They find difficult to find markets. They don't have so much of networking. So that's the other challenge, third challenge. So this is where the opportunity for microfinance companies is to not only to lend, but also to find markets and to improve network. Now I'll give you a very good example. The Postgraduate Institute of Management, where I work as the head of academic affairs, we have little over 10,000 alumni, and PIM works as the IIM of India. When it comes to Sri Lanka, PIM is the place where we have produced over 400 CEOs in and around the world. So what we do is, through our entrepreneurship module for MBAs, we have created another unit called Genesis to provide this network for the budding entrepreneurs to improve markets, to find markets, and to improve their network, and to sell their products and to pass that first stage to the second stage in the PLC. So the same theory, the same practice can be implemented in microfinance companies for these borrowers to find markets. Because if they don't find markets, they can't sell. That means repayment would be questionable. So that is one of the key aspects and one of the key challenges. Then also, the other one is they don't have enough knowledge about the level of quality and how the market works or behaves in this VUCA world. So they have to understand that small in size but big in quality concept. I'll give you some of the key examples for this. Most of the high-end winter jackets sold in Copenhagen, Helsinki, Stockholm, Oslo and London are stitched in Bangladesh, Vietnam and Indonesia as cottage industry. What they do is they import unpurified wool from Australia, New Zealand, and then purify them and stitch and put a nice tag or a label, brand, and then export them to top, Scandinavian countries and top 10 markets across the world. So small in size but big in quality, 110% quality, not 100%. So this is the message that we have to convey in this digital economy. The knowledge they have to have about the competition in the world, where the consumer is so competitive, they look for quality. These messages should be conveyed. Another example, if I quote in Sri Lanka, if you take the apparel industry, which gives roughly about a little over $4 billion of annual income as export earnings. But most of the Juki operators in Sri Lanka do not know the level of competition in the global market. So it's the duty of the owners and the HR people to educate and enlighten these people to improve their knowledge about the competition, about the expectations and the required quality level if they want to survive, grow and sustain in the global market. So it's the duty of the microfinance companies from that level, the lowest level itself, to educate them so that when they grow up, when they get into limited liability companies, public boarded companies, they know exactly what is expected, what is required in the world. So that's another challenge. And another challenge is to use computer as much as possible. I will come to that later. And also the risk evaluation. Microfinance lending should be, the cost of lending should be much lower than the corporate lending. Otherwise, no, they can't survive. They can't take money from money lenders. This is the reality in Asia, my dear friends, whether it's India or Sri Lanka or Bangladesh. You can't borrow money from money lenders and start a business. So, cost of capital or the microfinancing should be at a very lower cost. And also the risk evaluation and the working capital requirements, all these things are challenges for them. Because even sometimes these people might draw their working capital funds to meet their day-to-day requirements. If the child is sick, they will take the business money and take the child to the doctor. Because for them sometimes even 500 rupees can be a massive amount. And also another challenge is microfinance companies and microfinancing people hesitate so much to give loans to these people because of the risk factor. And we have to have a proper mechanism, even under the Central Bank of Sri Lanka or Central Bank of India, which is called the Reserve Bank of India, to come up with some kind of a qualitative and quantitative mechanisms to help this industry, microfinancing, cottage industry, to finance these borrowers, required people at the lowest possible cost. So these are some of the challenges that we can discuss out of many. Now recently I was at a particular seminar. Now, so I will share some of these experiences, what we discussed there under opportunities. Moving on to opportunities. Microfinance companies have to start, or they have to commence the digital transformation with a mobile phone. That is the basic step, the first step. I don't think that initially the borrowers will take a computer, but all are having, 90% of these people have mobile phones, smartphones, because actually whatever said and done, that they have reached that level today, smartphones. So that is the beginning. Tell them to use their smartphones to get the information, market information, pricing for their products, or the way that they can do business, find markets, at least to do a little bit of online purchases and online selling and that type of thing. So mobile phone can play a crucial role in microfinancing and digital economy. That is so crucial. That is the first step in grabbing the opportunities and overcoming the challenges. And also, you can, or the company or the authorities can develop a particular mobile app. Now, most of the banks have their separate or respective apps. So likewise, they can develop a common app. I'm pretty sure this is available in the market, but you can sometimes come up with a specific app for certain products, connecting the entire value chain. They have no idea about the value chain, but the people who are dealing with the banks and microfinance companies and the authorities have that knowledge. So they can connect the entire value chain from the upstream operations and the downstream, connecting all three aspects. So this is another opportunity. We should be in a position to convert every challenge into an opportunity. So this is the second opportunity, so much. Then the third one is even to give insurance for their products, or to provide the insurance coverage. There can be genuine issues. Example, no one expected COVID-19. Even if you had a contingency plan for your top corporate. Still, COVID-19 was totally unexpected. So there can be unforeseen, totally not envisaged situations. So as a result, you can have or you can introduce an insurance. So insurers will take care of their business to a great extent, or at least that would provide the required financial support for them to come back for resilience. That's another opportunity in this digital economy. Also, if they are really okay and if they are slowly moving towards the second stage of the product life cycle curve, we can introduce software packages like Mind Your Own Business with basic accounting practices. Because remember, in Asia, financial management of individual and especially the microfinance borrowers and the cottage industry and SMEs are very, very weak. Now, having lived in New Zealand, I can tell you, there, even Australia, New Zealand, most of the people who have taken loans, first they meet the bank commitment and pay the other obligations. And if they are left with some money only, they use it for their household expenses. But unfortunately, in Asian countries, most of the people who take loans from various organizations, banks and finance companies, they do everything that's possible. And then if they are left with money only, they think about the bank. That system has to be changed. Because if we can really look after or meet the bank commitments, first, when you are in trouble, bank will come forward to help you. So that has to be inculcated. That practice has to be inculcated among the microfinance companies as well as the borrowers. And also we can, again, the Reserve Bank can come up with a system for credit guarantee to make sure that they have more opportunities, even sometimes to go for expansion or introduce a computer or get to know some details, information, and even to browse the World Wide Web and to get some information and so on. Then also we can explore the opportunity of introducing this new technology to the second generation of the family. Maybe the borrower, father or mother, can be little old, but if they have a child at the age of 18, 19, IJ, definitely we can introduce that and take that child also as a borrower or partner to that company at ground level, and then introduce digital technology or digital whatever the devices which would help facilitate and take their business to the second level or even to greater heights. Then also, now this is coming from the strategic perspective. Microfinance companies, this is another very good opportunity. Microfinance companies can really look for the business domain without being myopic. Example, within their peripheries, within their premises, they can even have a small unit just to educate the borrowers about the devices and introduction of whatever the technology, new technology, enlighten them to have one or two practical sessions. Now I know in Sri Lanka certain banks are encouraging senior citizens to use the banking apps and e-banking and so on. So likewise they can expand, they can really look for networking and digital education and organizing even exhibitions at least thrice a year for them to come and sell their products and to send a little bit of e-flyers and various other things, and also to educate them on quality, the required quality, and to conduct few training sessions with few videos and so on, and also to develop certain apps with their own language or with their mother tongue so that you can really learn a lot without any language barrier. And also to improve their skills, skill development for various. Now when it comes to microfinance for pottery or goldsmith or whatever that type of things, you have to improve your skills. So skill development would give you the competitive advantage for your business. So these are some of the areas, the business domain that microfinance companies can think of and introduce as a value addition. My dear friends, now most of the companies, even microfinance companies, put so much of pressure on the bottom line. But I don't agree with that, because bottom line is only 33% for me as a strategist. And you have to focus on the top line, another 33%, and the topmost line, another 33%. If I further explain that, you get the core product, and second circle shows the supplementary product. And these two will help you to strengthen your bottom line. But if you go to the third circle, which is the augmented product, that could strengthen your top line, that is the revenue. And if you go to the fourth circle is what the customer expects. And if you go to the fifth circle, beyond the customer expectations, that would give the supernormal profits for the company, that is the topmost line. So enormous amount of hidden profits are embedded between the third circle and the fifth circle. But most of the CEOs, financial controllers do not see the potential between the third circle and the fifth circle. That's why they put so much of pressure on the core and the second circle of supplementary products. So this is how we have to think about not only the corporates but also the microfinance, and to improve their contribution, or to get aligned, to be congruent with the evolvement and the evolution of digital economy in this world. So these aspects are very, very important. And finally, when it comes to research, if you are conducting research, I have submitted a concept paper to the conference on rural development, community development and sustainability. So as I told you, sustainability is important, but at the same time, if you are doing a research, you have to understand their living standards. You have to go and sometimes live in that particular village or in that particular society, at least for a few days, to understand. I'll give you a very good example from the Sri Lankan perspective. There was a professor at a particular state university in Sri Lanka. When he was waiting for his PhD was on beggar behavior. And you don't believe, this particular professor went and lived with those beggars for 2 months to understand exactly what they talk, how they feel, their psychology and the difficulties and all these things. And one day, you don't believe, that his own mother had given few pennies when he was acting as a beggar, without even recognizing that his own son is there acting as a beggar. So that's the level, that should be the crux for your research on microfinance and cottage industry. And if you want to really develop the societal aspects or the people living in those levels, to do research and also to come up with practically possible solutions to overcome their problems. That can be theoretically sound, but if it is practically impossible, the purpose is lost. So you have to understand, when you do research on the cottage industry or about the microfinance, to understand their needs, requirements, wants and difficulties and barriers and obstacles and hindrances and all these things, you have to really understand them, live with them, share their experiences, experience their difficulties and do that research. So having said that, I once again thank you, all of you, for inviting me as the international guest speaker for this third conference at your esteemed university. And also, I would like to wish all of you, especially the research papers presenters and the panelists and all other learned professors who would be involved in this entire conference, a success and a pleasant evening. Thank you very much. All the best.